Welcome to the world of financing. If you're venturing into understanding the difference between grants and loans, you're in the right place. Think of loans as borrowed money you'll need to pay back, often with some interest. On the flip side, grants are like financial gifts for specific purposes. You don't repay them, but you must use them as directed. Let's dive deeper into these two pivotal forms of funding. Loans and grants represent two primary avenues of financial support, each with its unique characteristics and implications. Loans are monetary amounts borrowed from institutions, like banks, private lenders, or governmental agencies, which must be paid back over an agreed-upon period, usually with added interest. Their primary advantage lies in the flexibility they offer. Borrowers generally have a broader scope in terms of how they utilize the funds, provided they can meet the repayment terms. However, they do introduce the responsibility of managing debt and meeting regular payment obligations. Grants, in contrast, are non-repayable funds given out, most commonly by governmental bodies, philanthropic organizations, or trusts. They are specifically designed to aid, promote, and support particular projects, research endeavors, causes, or demographic groups. The allure of grants is evident in the absence of repayment obligations. However, this benefit comes with its own set of challenges. Those receiving grants must typically adhere to strict criteria, ensuring the money is used precisely for the purpose intended. Regular reporting, monitoring, and adherence to guidelines are common stipulations, making grants a responsibility in terms of accountability, rather than repayment. When exploring funding avenues, you'll encounter various funding programs, with grants often being the foremost option. There are diverse grant programs to understand, including government-initiated grants. These are financing mechanisms solely sponsored and overseen by government bodies. They can either be directly under a government agency or function in conjunction with governmental cooperation. Government-endorsed grants. While these grants might derive their funding entirely or partially from government sources, the control largely, or even entirely, rests with non-governmental entities like charities or banks. In such cases, the government might play a role similar to a guarantor or co-signer for the applicant. Grants without repayment obligations. This term is often employed by the government to avoid the perception of merely distributing free money. Rather than being deterred by such nomenclature, it's essential to conduct comprehensive research. Ensure you aren't bypassing a potential financing opportunity for your business due to misconceptions. Navigating the realm of government loans reveals a spectrum of options tailored to various needs. Let's delve deeper into their types and characteristics. Common features. Favorable interest rates. Government loans frequently offer more attractive interest rates compared to traditional banks, making them more accessible for borrowers. Mutual benefit. While they support businesses and individuals, these loans also offer returns and indirect benefits to the government, fostering economic growth and job creation. Distinctive features. Vote of confidence. Securing a government loan indicates faith in the borrower's potential and vision. It's not just about funds. It's a testament to the borrower's ability to harness them effectively. Backing and assurance. In many instances, even if a commercial bank disperses the loan, the government provides a safety net. This backing means that if the borrower faces repayment challenges, the government may intervene. Short-term loans. Immediate needs. These are geared towards pressing financial requirements that borrowers intend to address quickly. Smaller quantities. These loans tend to be more modest in sum, assisting with immediate or smaller scale projects. Long-term loans. Extended repayment. With durations spanning months to years, borrowers have ample time to repay, aligning with long-term projects or substantial investments. Sizable funds. Typically, these loans facilitate larger undertakings, such as infrastructure development or expansive business ventures. Targeted loans. Community focus. Such loans are curated for particular societal segments, whether they're minority-owned businesses, women entrepreneurs, or other distinct groups. Upliftment objective. The aim goes beyond mere financial support. It's about empowering specific communities, promoting inclusivity, and fostering diversity in the economic landscape. Now let's do a quick recap. Federal support recap. In the video, we learned that federal support is fully managed and dispersed by the government, ensuring centralized control. Highlight on government-endorsed grants. The video touched on grants funded by the government, but managed by non-governmental entities like banks. a key distinction to remember. Community funding overview. We delved into community-based funding, emphasizing its role in catering to the immediate needs of local businesses and the surrounding community. Insight into grants with no repayment. An essential point from the video was about these often overlooked funds, which, like grants, don't require repayment. Subsidized government loans breakdown. Lastly, the video spotlighted these common loans, pointing out their advantageous interest rates when compared to typical bank loans. Hope this recap helps. If you missed any details, consider revisiting specific sections of the video for clarity. I trust this video clarified the distinctions between loans and grants for you. When considering government funding, it's crucial to discern which financing method best aligns with your business needs. However, always keep an open mind to all options, as the right opportunity could be the turning point for your success. And a special note, this informative video and content is brought to you in partnership with fundingcourse.org. If you're keen on diving deeper, consider exploring their platform for more insights.